The global sell-off in semiconductor stocks accelerated overnight on concerns over stretched valuations for some of the AI trade's biggest winners. After the Nasdaq fell 2% yesterday, futures are under pressure again today. The Philadelphia Securities Index lost around $500 billion in value yesterday, and chip makers pulled the Nikkei 2.5% lower overnight, whilst tech stocks are leading Europe lower. Now, this sell-off has come as CEOs at Goldman Sachs and Morgan Stanley have warned over a market correction following a record run in the stock market, which has resulted in some stocks looking a little bit overvalued. Add into that, hedge fund manager Michael Burry fueled bubble talk by taking on two big short bets against Palantir and Nvidia, challenging the AI trade. Now, there have been rising questions about AI investments after a series of multi-billion-dollar deals in the AI sector, with money, chips, and cloud credits rotating in a closed loop among a handful of companies, paving the way to a trillion-dollar AI boom or potentially a bubble built on intertwined investments and contracts. In 2025, so far, ChatGPT maker OpenAI has signed deals worth over $1 trillion with Oracle, Broadcom, AMD, and Nvidia. And then just this week, OpenAI also agreed a $38 billion deal with Amazon to access its cloud computer infrastructure as it reduces its reliance on Microsoft. I think the question here is whether this circular economy is laying the groundwork for a bursting bubble or creating a fast-growing AI ecosystem for the world ahead. Now, there are different views on this. Bank of England Governor Andrew Bailey, JP Morgan CEO Jamie Dimon, they have warned of some form of bubble territory. But on the other hand, we have heard Federal Reserve Chair Jerome Powell highlighting the difference between the dot-com bubble and this AI trade, noting that AI firms actually have earnings. It's also worth noticing that this recent run-up that we've seen has been very impressive, and stocks rarely go up in straight lines. So the pullback that we've just seen recently is well within a healthy range, and the bullish trend remains intact with dip buying emerging. However, risk management is key when you're trading in environments such as this.